Welcome to another edition of Chart Talk. I'm Tony Ogorek. I'm here with Jeff Viksjo. And Jeff, today we're going to talk about why this is a very bad time to buy a house based on a number of metrics, but we've got a chart that sort of says it all. So let's take a look at our first chart. And what this takes a look at is income level of people and the cost of housing. And really an interesting story to be able to tell here. So why don't you take it from here?
Yeah, so housing prices are the purple line, and below that is earnings. So average hourly earnings for employees. What the point is that they should track each other. That the affordability of houses should generally track how much people are earning. That would be logical, but unfortunately, Tony, what we're seeing is that housing prices have taken off well above what anyone is earning, and so they've become very unaffordable.
Yeah, Jeff, we look at this over the past 25 years. And when you look at those gray bars, the first one is the NASDAQ bubble, and you see there was a little bit of space, but then, it tends to take off after that. Then we get the global financial crisis where real estate just got, shellacked, and you see that it actually, the affordability, that was the time to buy houses because the price of houses was actually below, the income line. But look what's happened as of recently, and particularly since that COVID recession, is that the gap has opened up massively, which means that the price of homes today is really being outpaced, by the level of income that you've got. The affordability is just terrible.
And so this doesn't even take into account the level of interest rates. So this is just housing prices. You couple that with higher mortgage rates, and houses have really never been so unaffordable.
Yeah, it's really a bad environment in terms of buying a house. For many people, Jeff, their disposable income, more than 50% of it is going to housing, which really just doesn't seem to be sustainable. Now, we look at our next chart here, and this looks at FICO scores, which is, how banks look at whether you are a good credit risk or not. And over here, we see some interesting stuff too, particularly since the COVID money came and entered into people's bank accounts. What do we see here?
Yeah, and so the question is, will something break? Will housing prices have to come down because nobody can afford them anymore? And this just gets to, how consumers are faring. You can see this is the FICO scores, and the median there at the top, you could see it did bump up during COVID. And why is that? Is because we got all the essentially free money,
right?
And we were able to pay off debts, and that helps your FICO score. But it's coming back down. So scores are getting lower, which again means consumers are less able to afford a home in the first place.
Right. So as with any asset, there's a time to buy, there's a time to sell. And at this point, housing looks extremely expensive on many fronts. And our advice to people would be, if you're looking for a house, maybe you rent for a year, take a year off, and the odds are that you're going to have greater affordability going forward. So thank you, Jeff, and thank you for listening to this latest edition of Chart Talk.